Good morning, small players. Here we are once again going through our pre-market scanner. These are our morning gappers, which are stocks that are set out to open higher than their closing price from the previous day. Outside of scanning for gaps, we also scan above average relative volume, which means that the stock has more interest today than any other day. And this is really the majority of the time a result of some news that dropped either overnight, last night after hours, this morning pre-market, and then investors and traders start buying it up. Basically, our strategy is these are the hot chick stocks for the day. We trade them the day that they pop up on the scanner because we expect that every other day trader out there is looking for them. These are, really small caps, mostly traded by retail traders. And then, if they pop up on scanner the following day or at some point in a few months, couple years, whatever, we will trade it again, but we never hold these overnight. There's a lot of overnight risk in holding really any stock overnight, mainly because there's no stop loss after hours and gap downs do happen. And then in these particular stocks, the risk is, almost even higher because they're so volatile and they have such large movements within a day. And, if we even look at their yearly charts, you can see a lot of that. So, for example, this poor stock, which is now trading at $3, at some point was at $32, right? This is not uncommon. This happens quite often with these stocks. So it's not, it's hard to imagine that anyone that bought here will ever break even, right? So just something to keep in mind because there's a lot of beginner traders that get in the market and they see these gap ups happening, and sometimes they go on for a couple days and they think, oh my god, I could have made so much more money if I held overnight, and then they get into a bad habit of actually holding overnight, and then maybe a couple times they'll get lucky, but it's overall statistically they're probably going to get unlucky a lot more. So in my opinion, it's just not even worth the risk unless it's a small cap company that you're actually doing insane amount of research on, and it's a long-term investment in an up-and-coming company that you think could potentially end up being bigger and successful and turn profit, and you're aware that it's an extremely risky investment and all of that. But the majority of the people that trade with us are people that have, young people that are learning how to trade for income and are just starting out their investment portfolios and learning how to dollar cost average into the S&P, and potentially, if they do enough research, even buy individual stocks, which is obviously riskier. Even if you're buying Apple, it's still riskier than investing in the general market. So those are like the first steps. Coming to the level of investing in small caps is advanced, investing strategy. That is really not something that probably the majority of our students are prepared for. So I always want to remind them, that these are very risky stocks. Okay, so on that note, the first stock on our list this morning is CTX. We've been trading this for the past couple of weeks. I forget what the original news were. Let's check. It seems like there's like a bunch of catalysts when they're talking about improvements in their processes and revenues, and this is probably the original catalyst. Oh, that's amazing. It's the first time they turned the earnings. That's a big day in the small cap world. Well, for any company, it's the first time they actually became profitable. So that happened in August. This is October, so obviously there's been a lot of volatility. Okay, so the levels, and you guys know if you watch these streams, we do this every morning. We chart the levels of support and resistance, and we use these levels to trade all day long. If it goes below, if it goes above, new levels are being formed, we chart those out, and basically we trade bounces on supports or breaks above resistance, and we wait for a trigger to take a trade. For example, when stocks are sitting in what I like to call no man's land, which is in between levels, there's no trigger. We never buy here hoping it goes up, right? That's not how we trade. We either buy if it drops here and bounces. It needs to bounce in order to trigger a trade. If it just drops here, we don't buy right away because it could continue dropping. We need to see some buyers coming in. We never want to be the first buyer. We want to follow big buyers that are bringing it up a little bit. Or if it breaks above this key level, which also happens to be VWAP. So I'm going to set an alert for break above VWAP on this. And again, if you're someone that likes to trade pre-market, you just have to watch the stocks that you're interested in, because these alerts on TD don't work pre-market, because the price doesn't get updated. But during market hours, they're very, very useful. They help once you establish what an entry would be. Well, I'm going to once you establish what an entry would be for the stock that you're interested in, you set the alert, and then you don't have to watch it anymore. When it hits the price point that you want, it will alert you. PROG is another stock that we've been trading quite a lot over the past few weeks. It looks like it has brand new catalyst this morning, so it's not a continuation setup like CETX, but actual new catalyst, which is good. More attention. Yeah, and that's this is another catalyst these stocks love. It's an analyst gave him a price target of $4, and they're trading it too. So obviously, a lot of potential seen there. So it makes investors and traders excited. I think some of these levels are levels that we've been using probably for the past few days. But they seem, a lot of them actually do work on the chart. So let's review them real quick. This level here is actually one of my favorite setups. This is what I call a flat top. So we have a very sharp rejection there once, then a very long consolidation there. And this is a 5-minute chart. So you have 5 rejections of that same level. So we know there's an insane amount of sellers here. So if you ever were to break above this level, that's a short squeeze potential. Break above 218, so 219 and higher. And this is something that we trade quite often. So flat top breakouts, my absolute favorite. Normally, very violent. All of these stocks have very low float, so it's easy. They move easily, and once the short sellers start getting squeezed out, the moves could be very violent. Outside of that, obviously, bounce on this level is a key level to watch for a trade. Bounce on this level for a reversal trade. Note, like, these levels are true supports, yes, because they're levels it's been reacting to the whole day, but they're below the indicators. So just something to keep in mind. When stock is below VWAP, it's more in short sellers territory. So it's a bigger uphill battle for long bias traders. I will, trade reversal trades below indicators sometimes, most of the time, if it's below VWAP, but I have my EMA 20 line sort of following below, and then I trade bounces on EMA 20. Here I have EMA 50, which, serves as good support, so I will trade a bounce there. But if it's below all of them, it's just not something that particularly interests me. I like to be in faster moving trades, like a flat top breakout where it just squeezes quickly. I'm in, I'm out. I don't keep my capital on the table for too long. When you trade reversal trades, you end up staying in the trade longer, and the longer you stay in these companies, the higher the risk, right? You could drop a midday offering, all sorts of things. Okay, this one will chart out the levels, but obviously it's like sort of below all indicators now, not very interesting at the moment, but obviously if you were to break above this level, that would be key, because we have a lot of rejection there. Once it broke above it, it's squeezed. Once it broke below it, shorts destroyed. So we know this is a key level that determines who's going to win the fight, shorts or longs. So a break above that level would be a level I would take for a trade. I just want to have the alert on, so I don't have to take this one. Keep. And he's not on scanner. We just traded it yesterday. It had an insane move later in the day, so I imagine people will still be watching it today. The reason why it's not on scanner is because, you know, it closed the gap, right? It closed here, went all the way up here, and then now it's back to the closing price from yesterday. So that's why it's not popping up as a gapper on the scanner. But if it perks out a little bit, the scanner will pick it up. So I'm just going to leave it on our watch list for the time being and chart out these very obvious levels of support and resistance that we can use for trades. Another stock that went absolutely insane yesterday is JSPR. We traded this the entire day. It was beautiful. I don't know, you know, obviously it's not on the scanner now and the volume is very low. So we'll see if anyone even looks at it today. But I'm going to leave it on the watch list because, again, every time a stock goes explosive like that during the day and gives like over 100%, not including the morning gap, but within the actual trading session, traders seem to, you know, think about it, come back for day two, but we'll see. So I'm just going to leave it there. This is a pretty chart, actually. Fighting rewrap right now, but did I just do this? I did. Okay, I'm just going to remove this particular drawing because I guess it's there from yesterday. I don't remember. Okay. So this is obviously a key level. One rejection here, more rejections here, rejections, rejections, rejection, and again, sharp rejection here. So a break above 1323. I mean, I probably can even call it 1325, but I'm just going to leave. And that's a key level. Obviously, if it bounced on VWAP after this breakout, if it touched VWAP and bounced, VWAP bounce would also be a trade. Now that it's below VWAP, you know, I'd probably wait a break above that level, or if it comes down to this EMA 20, I could trade a reversal trade. There's enough room between VWAP and EMA to take a safer trade. So I'll wait either for bounce in EMA 20 or break above this level to trade this particular stock. This one looks like it just dropped news. Yeah, just 15 minutes ago, dropped some news. You guys know we like to trade secondary news moves. We have to check the float on this one to see how safe it is to continue trading it 15 minutes after the news would drop. But we see, you know, a lot of these. Pretty much every 1 minute flag has been successful, and it's forming a new one right now. It had two bounces on this level of 7. So that support level has actually been tested twice. So that would make any trade a little riskier because the third time it tests it, that's really a short setup. And then, you know, it could drop pretty low if shorts do attack it. So right now, what I would look for here would be break above this flag for profit taking at high of day and potentially 7.5. I wouldn't take a bounce on 7 because it already had 2 bounces. I never trade a third bounce because that's where short sellers come in. So after that flag break, which would mostly be a scalp at this point, and the reason why it would be a scalp for me is because you don't have support you can trust. Your support has been touched a couple times, so the trade is very risky. So it would be smaller position and faster exit in terms of, you know, how we trade it, which is a scalp. And then if that's the one trigger that I'm waiting for, and the other trigger would be bounce on at least this level or VWAP. I wouldn't touch 7 anymore just because it was tested twice, so it's riskier. So then I would wait for the next level. I mean, it could even, you know, it could even do this one depending on how hot it is. The high of this candle could also, you know, give it a little bouncy, but we'll see. So at this point, this would be, you know, one profit taking, second profit taking, right? We said high of day and 7.5. And then, you know, now we're seeing tapes getting very green. This actually squeezing a little bit because he was able to get above 7.5. So apparently that's a short squeeze level. So we'll chart that just so we are aware. And at this point, you know, it's pre-market, so you don't have a stop loss. But if this was market hours, you would just lift your stop loss above entry, right? Because you knew it was a riskier setup. It worked out marvelously. For the third portion of profit, if you haven't taken it yet, you can just put a stop loss above entry, and then give it a second to try and hold 7.5. You know, this short squeeze level. I'm gonna actually add that one here because it obviously still has a lot of juice. It's probably a micro float. I'll check in our server in a second. See how big the float is. And yeah, these are just lower volume. Maybe they'll do something later today, but I'm not even going to bother charting them now because I'll actually want to go back to the room and trade this one. So I will talk to you guys tomorrow. Enjoy the day. Happy trading. And yeah, be sure to subscribe and turn post notifications on so that you're the first one to know when we post these videos.